Welcome to Talk Tickers. Today we are putting on our Wall Street analyst hats because we have a set of numbers here that, frankly, are a little hard to believe.
Hard to believe is one way to put it. I was thinking market breaking.
That's a good one. We're breaking down the fiscal Q2 2026 earnings for Lumentum Holdings ticker, LITE. And looking at the after-hours action, things got very energetic.
Oh, yeah. This isn't your usual earnings beat. You know, for the past year, the story with Lumentum was, oh, they're an AI beneficiary, kind of riding the coattails.
Right. A nice to have.
Exactly. But what this call did, and especially the guidance, is it was a graduation. They basically told the market, we are no longer just riding the waves, we are the wave. Or maybe the bottleneck is a better word. Your AI doesn't work without our lasers.
And that's usually just corporate swagger, right? Every CEO says they're the engine of something. But let's look at the actual market reaction, because that's where the truth is.
Money talks.
It does. The stock closed the regular session at $423.42. Then the print hits. And it didn't just move it. It gapped up instantly to $452 in after hours.
And the pre-market whispers this morning are for an open around $473.
That's what I'm talking about. That's a step change. That's the market admitting its entire valuation model was wrong.
Completely wrong. They're not pricing it like a cyclical hardware company anymore. This is critical infrastructure.
Okay, so let's get into the numbers that caused all this chaos. The scoreboard. Top line revenue.
$665.5 million.
Which beat consensus, right? The street was at what, $652 million?
Yeah, so a solid beat. But the raw number isn't even the headline, it's the velocity. That's 65.5% year-over-year growth.
65.5% for a company that makes physical things.
I mean, if this were some SaaS company, you'd be thrilled. For a company that has to run factories, source materials, and ship lasers around the world, it's just breakneck speed.
And normally when you grow that fast in hardware, you absolutely burn your margins to the ground. You sacrifice profit for share.
Right. Building stuff is expensive.
But the bottom line, non-GAAP EPS, earnings per share, came in at $1.67. The street was hoping for $1.41.
So that's an 18% beat on earnings. But zoom in. This is the important part. The margins. Non-GAAP gross margin hit 42.5%. That is up 310 basis points in one quarter.
Can we just pause on that? For anyone who doesn't live in a spreadsheet, why is a 3% jump in gross margin such a big deal?
It's the magic word, operating leverage. Think about it. It costs a fortune to build a laser factory, a fab. That's a fixed cost. Yeah. But once it's built, every single extra laser you sell is almost pure profit.
So their costs are staying flat while revenue's going vertical.
Precisely. That's why the operating margin expanded to over 25%. They are turning into a cash machine.
Okay, so the machine is humming. But the guidance, I honestly thought this was a typo when I first saw it. The Q3 guy.
Oh, the guide is the real catalyst.
They are guiding revenue for next quarter between $780 and $830 million.
The midpoint, $805 million, implies, get this, over 85% year-over-year growth. 85%.
It's just wild. And they're guiding for a 30 to 31% operating margin. That means the leverage we just talked about is kicking in way faster than anyone modeled.
The street was completely caught off guard.
Okay, so those are the headline numbers. But the real reason we do this is to find the stuff the algorithms miss, the hidden gems in the call. And for me, it was all about OCS, optical circuit switches.
Yes, everyone is obsessed with transceivers, but this was the big news.
So break down OCS for us. When I hear switch, I think of a light switch on my wall.
It's actually not that different, just way cooler. Okay, so in a data center, data is light flying through fiber optic cables. Normally, to redirect that light, you have to catch it, turn it into electricity, use a chip to switch it, then turn it back into light.
So it's like a toll booth. It slows everything down, creates a traffic jam.
A traffic jam that generates a ton of heat and burns power. An OCS, an optical circuit switch, it doesn't do any of that. It uses tiny microscopic mirrors to physically bounce the beam of light where it needs to go.
Just mirrors.
Just mirrors. No conversion. No electricity in the data path. It's pure physics, pure speed.
But the knock on Lumentum was always that this was a science project.
Right.
They had one big customer. We all think it was Google, and nobody else was buying.
Exactly. The dreaded single customer concentration risk. But here's the nugget from the call. Management confirmed the OCS order backlog has surged well beyond $400 million.
Wow.
And crucially, they are now shipping to 3 major customers at the same time.
This is not just Google anymore. You got to think that's Microsoft, Amazon. The other giants are getting on board.
That's the only conclusion. And the timing. They said the majority of that $400 million plus ships in the second half of this calendar year.
So in like 6 months, A massive revenue wave is about to hit.
This is why the stock is moving. The market just realized OCS is no longer an experiment. It's the standard plumbing for next-gen AI.
Okay, speaking of standards, let's talk about the speed wars. Deep dive segment 2, transceivers and the race to 1.6 terabits.
This is where Lumentum made another really bold claim. They said they've gone from catching up to being in the lead pack for 1.6T.
Yeah, and there's a lot of jargon here. Silicon photonics versus EMLs. Can you decode what's actually happening?
Right. So the industry narrative has been that silicon photonics is the future, and it probably is long term. But Lumentum pointed out that for right here, right now, the ramp to 1.6T is being driven by EML's electroabsorption modulated lasers.
Oh, the old school tech is actually winning the race for now.
It is, because it works, it's reliable, and it can handle the power requirements. They're seeing a huge mix shift toward 200G per lane speeds, which use these EMLs. That's 10% of their laser chip revenue now.
And they said it'll be, what, 25% by year end?
25%. And those are premium, high-margin chips, so as they sell more, their average selling price goes up, and margins expand even more.
Management had a great line about this. They used to think they might have to cap the transceiver business at $1 billion a year.
Right, like, oh, let's not get too big here.
And now they're just like, yeah, it's going to be difficult to cap it.
That is the best problem to have. Demand is so high you can't even count the money fast enough. And it's profitable growth.
Okay, let's look further out. Deep dive segment 3, the future. CPO co-packaged optics. And this whole idea of scale up. This felt like the most visionary part of the call.
It really was. Lumentum dropped a hard number. They got an incremental multi-$100 million order for ultra-high power lasers, specifically for CPO.
Multi-$100 million. That's not a test run. That's a real deployment.
A real deployment with delivery in the first half of calendar 2027. But we have to talk about scale-up, because this is a fundamental shift in data center architecture.
Yeah, break it down for us. Scale out versus scale up.
Okay, scale-out is like the highway system connecting different cities. It's the long fiber optic cables connecting racks of servers.
Got it.
Scale-up is the traffic inside the city, or even inside one skyscraper. It's the connections inside the rack itself. GPU to GPU, super short distances.
And that's always been copper wire. Cheap and easy.
It was. But copper is hitting a wall. A literal wall of physics.
Yeah.
When you try and shove 1.6 terabits of data through a tiny copper wire, it breaks down. The signal degrades, the wire gets incredibly hot.
It's like trying to drink a thick milkshake through a coffee stirrer.
Perfect analogy. Management said it explicitly. The industry is pivoting to replace copper inside the rack because it can't handle the speeds AI requires.
So lasers are coming inside the server.
Exactly. Lumentum expects the first scale-up CPO shipments by late 2027. This is an entirely new, massive market for them.
But hold on. If you seal a laser inside a liquid-cooled server, what happens if it breaks? You can't just pop the hood, swap it out.
That's their secret weapon, their reliability mode. Lumentum's heritage is in subsea cables, the ones that sit at the bottom of the ocean for 25 years.
Right, you can't send a repairman down there either.
You can't. They have to work, period. And they're using all that reliability data from their subsea business to prove to the hyperscalers that these CPO lasers will not fail.
That's a killer selling point. Our lasers work at the bottom of the Atlantic. They'll be fine in your server.
It builds a level of trust you can't buy, and it leads right into the supply chain, because all this demand is creating a huge squeeze.
Ah, yes. Deep dive segment 4, the power dynamics. Because it sounds like they can't make this stuff fast enough.
They cannot. Their main indium phosphide wafer fab, where these lasers are made, is fully allocated. It is sold out.
Sold out? Take a number.
Pretty much. They're adding capacity as fast as they can, but until that new capacity comes online in late 2026, it is a seller's market.
And this is where they're getting ruthless.
Yeah.
The part about the LTAs, the long-term agreements.
This is where you see the power shift. They said basically all of their capacity is already spoken for in these LTAs through 2027. So if you're a big hyperscaler, you've locked in your supply.
But what happens if you need more? Or if you don't have an LTA?
If you need more, you pay a premium. Surge pricing. If you don't have an LTA, you get what's left over.
Ouch. And they didn't mince words about who gets left over, did they?
Not at all. They explicitly called out legacy telecom customers, the old phone and internet companies. They said those customers are facing continuity of supply risks.
That is corporate speak for, sorry, you might not get your parts.
It's Lumentum prioritizing the hyperscalers who are growing at 85% a year. It's ruthless, but it's smart business.
You feed the growing beast. Okay. We've hit the numbers, the tech, the supply chain. It is time for our favorite segment.
This is not financial advice.
Exactly. Full disclaimer, we are not your financial advisors. Do your own diligence. This is purely for entertainment. But if you had to pitch a trade based on the subtext of this call, what is it?
I've been thinking about this one. I'm calling it the copper killer leap spread.
The copper killer. I like it. Ominous. Go on.
The thesis is simple. Management just told us point blank that copper is hitting a physical wall inside the data rack, and the pivot to optics for scale-up begins in late 2027. The market is a forward-looking machine. It will price that in way before it actually happens.
Okay, so what's the trade? How do you play that?
It's a spread. On the long side, you obviously buy Lumentum, LEAE. You might also look at their key back-end contract manufacturers, the companies that actually assemble the optical modules.
So you're long the manufacturers of LITE. What's the short?
You short the pure-play copper cabling companies, specifically the ones heavily exposed to the data center rack, the companies whose story is all about selling more copper for AI clusters. If Lumentum is right, that business is about to shrink dramatically.
It is brutal. It's a pure technology displacement bet. Is there a specific kicker?
There is. For the LITE trade, you don't just buy the stock. You buy the January 2027 LAAP call options.
Okay, why that specific date? January 2027.
Look at the timeline. That massive multi-$100 million CPO order and the $400 million OCS backlog, they both start converting to revenue in the first half of calendar 2027. By January, the guidance for that monster period will be public.
Yeah, so you're not betting on today's earnings. You're betting on the moment the market wakes up and realizes copper is dead inside the AI rack.
You are buying a ticket to the inflection point, before the revenue even hits the income statement. It's high risk, but if that architectural shift happens, the payout is just massive.
I love it. The copper killer leap spread. Again, absolutely not financial advice, just an interesting thought experiment.
The best kind.
All right, let's wrap this deep dive. The quick recap. Revenue, up 65% year over year.
Guidance, implying 85% growth next quarter.
Backlog on one product line alone, OCS, is over $400 million.
And the big picture takeaway, Lumentum has made the leap. They are no longer just another cyclical components company. They are a mission-critical utility for the entire AI industry. The step change is real.
They aren't just riding the wave, they're the ones building the surfboard. That's all for today. Keep your eyes on the backlog and your ears on talk tickers. We'll see you on the next print.